All right, good morning and good afternoon. So this will be a continuation of our forecast the previous week's during the previous week's video, which is Tuesday, 11th of February. So last week we noted this sell side liquidity because it is relative equal lows with this low. The algorithm sees this low and this lows as relative equal lows. Hence, our draw on liquidity going into the close of the previous week and also this week. Now, we indicated this sell side, this CB, which is a sell side imbalance, buy side inefficiency, meaning we are the sell side is on a the delivery was done on the sell side and lacking in buy side delivery, making this which is a CB, sell side imbalance and sell side inefficiency. So a sell side imbalance and buy side inefficiency, meaning the sell side is on the imbalance is on the sell side and it is lacking in buy side delivery, which we had here. So when price created this imbalance here, we rebalance this imbalance with this rally higher, making this a balanced price range. It has been balanced. Now on Monday, price rallied higher, trading to the midpoint of it with the week, failing to trade with a body close above the midpoint of it. When you have price action like this is extremely significant because it is the algorithm tipping its hand to you that the market is about to become extremely bearish. When the market fails to trade above the midpoint and close above the midpoint of a PDRA, whatever PDRA, specifically most times imbalances, when the algorithm fails to trade above it and close above the midpoint of this PDRAs. This is the algorithm telling you that price is seeking sell side liquidity, meaning you would be expecting a delivery to the sell side. Now, when you understand this criteria in price action, you will understand that write this down in your journal. The best fields for sell. So when you are entering a sell position, the best fields you are expecting the best fields to be formed below the midpoint of that PDRA. Inversely, when it is for a buy program, you're expecting the best buys to be formed above the midpoint of that PDRA. Does that make sense? So we had that this job here, meaning this is a shift in market structure, confirming this as a consolidation and this an expansion. So when we have an expansion, we expect a form of retracement to an imbalance. So we retraced to an imbalance, then dropped lower. Accumulation, manipulation, and distribution. So here we had the first stage of the distribution to the sell side. The first stage happened here, so price dropped lower. Then we went into a form of consolidation from the first week of February until this until the third week of February. So we had this consolidation. This consolidation it is the algorithm generating sentiment on both sides of the market. Now this is part of what we want to discuss in today's video: sentimental analysis. In this YouTube channel, I've made a couple of videos on sentimental analysis, but in this particular video, I would give you some resources, idea, if you will, to how to study this sentimental analysis, how to gauge sentiment from the general public, and how I personally do that. Now, understanding the sentiment of the general public, it gives you an edge to frame your bias and to confirm your bias. Sorry, not frame your bias, to most times confirm your bias. Why is this? Because we are trading algorithmic theory. This market is 100% being delivered by an algorithm. You don't have to take my word for it. You'd have to confirm this by yourself in the chat. That way, you'd have no room for doubt. Now, because we are trading an algorithmic theory with the logic of exactly how the market maker distributes price, the market maker meaning the central banks, how they actually book price, we understand that all other logic, all other school of thought is wrong. It is of a flawed logic. You get that? So because we understand that all other school of thought is of a flawed logic, and when something is fake, most times it is easily accessible to the general public. Now, because this flawed logic it is fake and it is generally accessible, we understand that the majority of traders, the majority of speculators and spectators, they will be relying on this flawed logic to confirm or negate their bias. Meaning, we are looking for this, we are looking for a pool where you have a bunch of traders and speculators implementing this flawed logic as the truth. We are looking for that type of pool. That is where we would want to do our sentimental analysis. Now, personally for me, if I'm trading the Nasdaq and the S&P, I make use of YouTube for my own sentimental analysis to get a sentimental feel for what traders are thinking. Then I use that to confirm my bias. Now for Bitcoin, when we indicated this relative equal lows last week, that this is our draw on liquidity. To confirm this bias, I personally went to Twitter and did a random scroll around the crypto Twitter to see where their sentiment is in price, where they are expecting price to draw to next. So when we have this sentiment during this consolidation, they were saying the banks are accumulating because price created this set of lows, this clean lows like this. So this will be seen as a support level. This now is a support level. They'll indicate this as a fake out. They'll indicate this as a fake out, this as a fake out. I really don't know what a fake out is, but that's what they call it. Like price making a false, making a low that is not actually a low. So it's just trading below this support level, meaning making this a strong support level, strong in quote. Now, because we understand that they will see this as strong support level, and I saw a couple of spectators, a couple of traders in on Twitter saying the we have been making strong support here, meaning we are going for higher prices to this resistance, this high, and ultimately this high, which is above 109,000. Now, because we understand this and we understand that their logic is flawed because they are not trying to pair up liquidities on both sides of the market. With on Thursday, sorry, on Tuesday of the previous week, we rallied higher one more time to pair up this minor buy side liquidity. This year is a minor buy side liquidity because price cannot be trading in a one-sided direction continuously. If not, the market will crash. It has to deliver both buy side and sell side to unshake, if you will, orders on both sides of the market, and shaking orders from buy side, distributing them at sell side, engineering buy side, coming to rebalance and fill an old imbalance, coming down also to distribute that field imbalance that has been accumulated. So on Friday, the previous week, we traded lower, creating this expansion leg. We created this CB, this sell side imbalance, buy side inefficiency, which is a fair value gap. Now, when this fair value gap was created, we indicated this as our fair value gap, expecting price to create to show us an indication of willingness for coming for this sell side delivery. What indication did we just discuss earlier? When a PDRA is formed, we expect price to when we are expecting lower prices, we expect that PDRA to not be filled above the midpoint of it. If price should trade above the midpoint of it, it is allowed to trade to for weeks to trade inside of it. But we do not want to see body closes above the midpoint of a PDRA. So here is a fair value gap, which is a CB. So as you can see, price traded to the midpoint of it, then we have a week do damages higher and another week trading above the midpoint of it here. But as you can see, the body of these candles fails to close above here. This is further indicative of bearishness in price. Now on Monday's trading, price rallied higher above midnight opening. So we had midnight opening price during London's trading, price rallied above midnight. When we rallied above midnight, we came to the low of this fair value gap and then dropped lower, targeting this relative equal lows, this low, and ultimately this relative equal lows. Does that make sense? So that was our draw on liquidity from the previous week up until this week. And as you can see, we've had that here. So this is a quick explanation of the previous analysis on Bitcoin when we have this as our draw on liquidity. All of this that has just been spoken, the logic was already given to you beforehand last week for you to study. So for the diligent students that did their study on this, they would understand that we've been seeking price to come for these lows and we're expecting PDRAs on we're expecting premium PDRAs above the marketplace to act as a resistance, resisting price from going above them. Does that make sense? So that is that. I hope you got something from this video. I'll talk to you tomorrow and good luck, good trading.